Hello, good afternoon all of you. I'm Renisha from Commodities Research. Today I'm here to give outlook on commodities for this week. Last week, four central banks, that is RBA, RBNZ, ECB and Bank of England, announced no changes in the monetary policies. Among them, ECB's statement was the most eye-catching. The use of reference strong vigilance signaled a rate hike is imminent in July. Yet the focus of the commodity market last week was on the OPEC meeting. While there had been rising speculation that the cartel would increase production quotas to around 1 million barrels per day to cap oil prices upside, cohesion of member countries greatly deteriorated and no change in the quotas was the result. Precious metals spent last week consolidating and retracing the recent gains due to dollar rally. Gold plunged sharply to 1 week low due to strength in dollar, and the precious metal might have been weighed down due to fall in euro, which fell after ECB's growth forecast. Yet we believe lingering sovereign debt concerns and growth slowdown fears should be supportive for the metal. The ECB is likely to raise policy rate to 1.5% in July. However, disappointing growth and inflation projections signal that might be the last hike in this year. Rate hikes may be negative for gold as investors divert capital to high yield assets from gold, which gives no interest. Base metals extended its losses on weekend on the series of negative data from China, UK and India. The dismissal Chinese import numbers were followed by the weak IIP report, and that was tracked by the UK manufacturing data that gave no respite for the market. China will report a series of economic data this week. Investors are worried that the set will give more evidence on slowdown in the world's biggest economy growth driver. In the coming week, Bank of Japan is expected to leave the monetary policy on hold. Another key theme will be released is Chinese macroeconomic data, that is inflation, which is expected to remain elevated after moderating to 5.3% last time in April, while other indicators include retail sales, industrial production and fixed asset investment from China in the month of May. Overall, metals remain in limbo. There are concerns over the handling of the European Union debt, global growth and the ending of quantitative easing too in the month of June. So it is not surprising the prices are struggling at the upside levels. In addition, the rebound in the dollar is negative for all the commodities and specifically for metals, and as the lower Chinese copper import numbers indicated that the prices are not sustainable at higher levels. On balance, we favor further consolidation but with the downside bias while the dollar remains upbeat. Strategy for the next week is to sell silver and nickel. The top pick is silver. I suggest to sell silver around 44,000 levels with the stop loss of 55,300 and the target remains 52,000 and 50,000 within 15 to 20 days. Next strategy is nickel, which is also looking very weak below 1010 levels. It could be sold below 1010 and stop loss could be 1040 and targets are around 980 and 960 in a short term. So this is all from my side. Bye, happy trading.